PharmD Nation, do you work? Do you have kids? And are you paying for those kids to go somewhere like daycare while you're going off to your job? If you do, you're going to want to pay attention because there's some pretty substantial rule changes that happened earlier this year that affect Dependent Care FSA contributions and dependent care credits that you're most likely taking advantage of if you said yes to both of those two questions at the beginning. Let me explain further. The American Rescue Plan of 2021 was signed into law in March of this year, and one of the big changes was increasing the Dependent Care FSA contribution amount from $5,000 up to $10,500. For example, let's just say you're a pharmacist making $130,000 a year. You can reduce that $130,000 number for tax purposes down to, or you used to be able to reduce it down to $125,000 by taking $5,000 of your gross money and contribute it into that Dependent Care FSA. So instead of federal income tax, state tax, and employment tax being calculated off the $130,000 number, it instead is calculated off the $125,000 number. So there's some tax savings there, and that's the benefit of that type of an account. Due to the plan changes earlier this year, that $5,000 limit has increased to $10,500, which is phenomenal. So if you're making $130,000, you can reduce that gross number down to $119,500, which is just going to increase your overall tax savings. The other big benefit you're going to want to be aware of is the dependent care credit changes. So before, if you were married and you file a joint tax return and you had 2 kids, you could potentially, depending on your income, get a credit of up to $6,000 if you had that much in child care expenses that year. The big change in 2021 is they increased that number up to $16,000 for 2 kids, but there's phase-out limits. Most likely a lot of PharmD families, especially if both spouses work, are going to see that phase-out limit down to 50% or down to 20%, which means that $60,000 number or $16,000 credit number for any household that has 2 kids is probably going to drop to $8,000 or maybe even down to $3,200, which I believe is 20% of $16,000. Why are these two things important and how are they aligned with each other? Well, you can use both within the same year, but you can't use both on the same expense, which means if you only have $2,000 of child care expenses, you can pick and choose which benefit you want up to the $2,000 amount. This provides for a unique planning opportunity for households that are married that find one spouse earns far more than the next spouse, and that higher earning spouse earns a lot more than $129,000 in a year. Let me explain. So remember when we talked about earlier that if you can reduce your gross taxable income by contributing money to that FSA dependent care account, and the tax you're able to avoid on reducing that income is federal tax, state tax in some cases, and employment tax, which is Social Security tax and Medicare tax that gets taken out of your paycheck. Well, if you're a higher earning spouse, there is a Social Security tax limit, which I think is like $128,000, $129,000. And after that point, any additional income you earn above that does not get taxed on that Social Security limit. So the planning opportunity is if your lower earning spouse has access to a dependent care FSA and you know you want to take full advantage of that, it could potentially be better to have that lower earning spouse load up on the dependent care FSA because her tax savings would include federal, state, and all of that employment tax because she's under that Social Security tax income threshold where the higher earning income spouse would not be. So just keep that in mind. Another unique feature that rolled out this year, specifically for 2021, is if you want to make changes mid-year to the amount of money you're contributing to your dependent care FSA, you may have the ability to do that where in previous years it was off the table. It's completely determined on what your employer has to offer. So if you find yourself in this situation or you want to learn more or you think your personal financial situation could be better managed to take advantage of these two rule changes this year, talk to your employer and see if they give you any flexibility for making in-year plan changes to the amount of money you're contributing to the FSA dependent care account if your employer offers something like that. So just be aware this is going on, PharmD Nation. Take advantage of it if you feel like it's something that's going to help your financial situation in the year 2021.